All right. Hey, folks. Welcome back. This is Jason, host of Fighting Words Financial. Let's talk a little bit about Michael Burry today. The question came up in my live stream yesterday, and I gave sort of a glib answer to what I thought about Michael Burry. The reality is, I've actually done quite a bit of research on him, and I wanted to talk a little bit about why he's making the moves that he's making today. But let's quickly go over what's going on in the markets right now. As the market is coming to a close, the S&P is down by 30 points, about 0.7%. NASDAQ down 158, about 1.2%. The more volatile Russell 2000 is down about 1.6%. And the Dow Jones is down about 0.4%. So it's down all the way across the board today, mostly in anticipation of the Fed minutes that are coming out and a couple of companies that are releasing earnings after the bell today. So it's really going to be about the minutes. A lot of what we think we know from public conversations about Fed meetings is not always what is shared in the minutes. And it tends to go into a lot more detail when it comes to the minutes because we don't actually see the Fed meetings. We see the press conference afterwards where they announce things. So, and the Fed's minutes usually come 3 weeks to a month later, and it's always digested by the market kind of on the spot. So you'll see futures go one way or the other here pretty soon. But today, let's talk about what's going on with Michael Burry. All right. So this is kind of the headlines that we all saw with Mr. Big Short. Michael Burry makes a shocking decision. The investor who successfully bet against the U.S. mortgage market before the 2008 crisis has just made a huge gamble, right? And the article goes on to say that it's a puzzling decision. He basically sold everything that he had and only invested in the single stock, and that is GEO. And GEO is a company, and I like their description on the website on their company description because it doesn't tell you exactly what it is that they do. But let's look at this. So they're a leading diversified government service provider specializing in design, financing, development, and support services for secure facilities, processing centers, and community reentry centers in the United States, Australia, South Africa, and the United Kingdom. They run prisons. And they run detention centers for immigration, all kinds of things like that. So I agree with the sentiment that one thing that's not going to be affected by a downturn in the economy is the need for prisons. We live in a society where, for some reason, we like to incarcerate people for just about everything, and the need for prisons aren't going away. We're one of the only countries in the world that operates prisons on a for-profit basis as well, and it has been highly profitable. This company is actually structured as a REIT, interestingly enough, which means that it's going to have to push out a dividend. They got full-time employees, about 18,000. So here's the interesting thing about this company. We've actually seen about a 2% annual decline in revenues since 2019. We've seen a similar decline in earnings since 2019. Now, their recent last 4 quarters of earnings, 3 quarters of earnings have beaten expectations. But this is not a company necessarily that I would be looking at to invest in on a short-term basis. This would be something more long-term, although I have my issues with investing in prisons to begin with. But look, talking about why Michael Burry is doing this is possibly more important. And I don't believe that it's simply related to the economy, okay? I think a lot of what's going on with this company is, let me see, what was I searching for? Yeah, so a lot of what is going on. And let's talk about a minute here just for Michael Burry's importance in the economy. A lot of people pay attention to what this man says because of the movie that came out in 2015. Very few people knew who he was apart from, people on Twitter and Reddit. Very few people knew who Michael Burry was until the movie The Big Short came out in 2015, I think. And since then, he's been fairly popular. All right. So let's talk about what his fund is actually doing, how much money he has under management, and how much he moves markets. And I think you're going to be surprised that it's not really that much. The GEO Group holdings that he has only accounts for, I think, $3.5 million of his portfolio. And let's take a little bit of a look at that right now. So this is the 13F that they filed. So all hedge funds, when they sell something, they have to make a filing. When they buy something or they go long on a stock, they don't necessarily have to make a filing. But when they go long, short on a stock, when they like sell a put on a stock or something like that, or they go short on it, or they sell something, they have to report it on the 13F. Okay, so this is what he sold. So Apple, Bristol Myers, Brookings, Discovery, Alphabet, Cigna, Meta, Onivtiv, Nexstar, Stellantis, Global Payments, and Sportsman's Holdings, right? Wholesale Holdings. So I added this up for you so you don't have to do it. It's only about $200 million. That's all he has under management. So let me put this into perspective for you. In terms of a hedge fund, he is above average. The average hedge fund only has somewhere between $0 and $100 million in terms of actual assets under management. But I think in another filing, he had $291 million. It looks like there's been significant outflows in his fund in this year. That may be another reason why he liquidated, because there's been so many outflows and he has to satisfy all of those. But he only has 4 clients. That's it. So asset-based management out of Saratoga, run by Dr. Michael Burry, is a hedge fund with 4 clients and discretionary assets under management of $291 million. And this is from Form ADV 2020. This is back in April. I think there's been a decline in asset prices in his accounts in April. I also think that there's probably been some asset outflows from his accounts since April, since the liquidation of 100% of his accounts a couple of days ago only accounts for $200 million in assets, right? So between the $200 million in assets that he liquidated, and so there's basically $91 million missing from that allocation. It could have all been in cash before that, but I'm not seeing evidence of that in prior filings, right? So, and the other thing, this is a man that trades frequently. This is a man that wildly rebalances his accounts frequently. This is the sector allocation over time, only going back to 2015. This is not someone who holds things for a long period at all. So I tend not to pay that much attention to the trades that he's doing on a daily basis. Number one, the man is not, the assets that he has under management are not large enough to move markets. It's not like the head of Goldman Sachs saying, instructing all of his portfolio managers to reallocate, and Goldman Sachs has like $9 trillion under management. Okay. So definitely not that level in terms of importance. I think that what he says is magnified by his popularity on Twitter. I would have thought that he would have a lot more in the way of clients, but he really doesn't. He only has 4. Also, new purchases in terms of the stock, it was 1 stock and $3.5 million of it, which represents less than 2% of his overall portfolio. Okay. So the importance of this, I think, is being overblown. But one of the things that he may be worried about, and it's not just crime going up in a recession, that is, as Michael Will says, that is well proven and longstanding. Crime does go up in a recession, but you can't actually correlate us building new prisons and a recession. That is also something that is well proven and longstanding. Prisons just tend to get more crowded. Okay. So this is what makes this kind of more mysterious. So a lot of what they do too is building tent city sort of facilities. Like they did a lot of the facilities when we had the Haitian refugee crisis. I think it was last year. They did a couple month camp for that, and now that's shut down. They've done it before on other parts of the southern border. They've done it in they've actually done facilities, I think, in Puerto Rico as well after the hurricane. One of the big fears that he may actually have, and I'm seeing this more and more, is the fear of political violence and the fact that our federal holding facilities for folks like this, we're really not set up to hold insurrectionists and things like that. And that is bordering on conspiracy territory. And if you watch my channel, you realize that I don't really put up with a lot of conspiracy theories. It's not that I'm not interested in them. I am. I investigate a lot of them. The problem is I just don't believe any of them because I have the experience of being a part of and managing groups of people that are extremely highly intelligent, who think they're the most intelligent people in the room. Those people can't keep secrets. I've also had the experience of managing people, large groups of people below average intelligence, who also think they're the smartest people in the room. They can't keep secrets as well. Secrets are very hard to keep. To keep. And I think that people that believe in conspiracy theories have never had the experience of managing large groups of people in those two classes, meaning people that are below average intelligence who think they're the smartest person in the room, and people 2 to 3 standard deviations above average intelligence who also think that they're the smartest people in the room. The best people to work with to do anything on a secret basis are 1 to 2 standard deviations above average intelligence, smart enough to do the work that's required, and smart enough to understand the consequences if things leak. And those groups are actually hard to form. And the larger they are, the more likely it is you're going to get somebody in one of those other classes in there. So I don't want to delve too deep into conspiracies on this channel ever. Like I said, none of them ever work out, and none of them are actually proven to be true. There's always like one little grain of fact in there that people hold on to. But look, that's one of the things I wanted to address a little bit more completely that came out in the conversation yesterday that I was having with people making comments on the live stream, is that Michael Burry's company is actually not all that important. So the average assets under management for what's called a registered investment advisory fund, that's not like a hedge fund. They don't do a ton of fancy stuff. All they do is give people advice under the fiduciary umbrella, usually with a assets under management fee. The average assets under management for a company like that is $341 million. So he actually manages a lot less money than the average registered investment advisory firm. And he's supposed to be this specialty investment manager, this absolute genius, whatever. So he ends up selling all of his stocks, right? And these are the top sellers on the 13F. He only keeps the GEO group, but it's only 2% of his portfolio. So I don't think there's any importance of him actually owning GEO, even though, like I said, it may be that in his mind that the prospect for political violence has gone up. I do think that this is one of the weirdest things about investing in the United States right now. This is the first time in my life that I've actually had to calculate in political risk into the conversation that I'm having with folks right now. If you invest in the United States, you basically never had to calculate in political risk. You invest in China, then you calculate in political risk. You invest in South Africa rather, then you're thinking about political risk. Now, South Carolina, you probably would think about political risk. If you're investing in Texas, you probably would think about political risk at this point. Politics is affecting business in a way that it never has, with some businesses located in other areas reconsidering opening up or moving into places where the political winds are not in their favor. So this is the first time in my investing life that this has really become a subject that has come up with people over and over and over in a political setting. And it's added a new dimension and layer of complication to managing investments, to having conversations with folks about investments. And I think that's something that needs to be addressed. So I'm opening up the questions, guys. I think that the super chat features are on today. I'm not sure if they are or not. Happy to answer any questions. I'm going to open this up a little bit wider. Every once in a while, I delete a question before it gets out there because it's wildly conspiratorial or just not helpful at all. I'm not going to do that today. So if you have anything that you've ever wanted to ask my opinion on, let me know. Also, I wanted to talk about something that I've been talking about now for 2 years on this channel, which is why it's beneficial to be in bank stocks or financial stocks in a rising interest rate environment, right? And so this is one of the places that when Michael Burry decides to go back and start investing again, he's probably going to lean pretty heavily on financials. And we're going to talk about why that is right now. Banks are poised to earn higher profits as interest rates rise, right? And let's talk about why that is. There's a bunch of symbols in here. They're all down today, of course. It really has to do with them being spread lenders. I talk about the spreads all the time. So for an example, a sequential improvement during the second quarter, Comerica of Dallas reported a 23% increase in net interest income from the first quarter. The bank's net interest income is its interest income less the cost for deposits and borrowings. So the cost for deposits right now is basically like 0.5% for most companies. And that's kind of unbelievable. The core earnings driver for most banks, leaving aside those that focus on more capital markets like JP Morgan, Chase, Bank of America, and Citigroup. So during the second quarter, Comerica's net interest margin spread between the average rate it earns on loans and investments and the average rate that it pays for deposits and borrowings expanded by 55 basis points to 2.74% from 2.19% in the first quarter. Comerica attributed the shift in its balance sheets with deposits declining because of the bank's interest rate management and customers utilizing balances to fund business activities. The average cost for interest-bearing deposits was 5 basis points in the second quarter, in line with the first quarter. meaning banks still aren't paying any interest, but they're charging a lot more. By the limited information above, it would seem that Comerica is flush with cash heading into the Federal Reserve's round of increases for short-term interest rates, and policy change allows for its securities portfolio to begin running off, which has pushed bond and loan rates higher. So he makes 3 points in this article. Deposit costs didn't significantly increase this year, though in the second quarter, they're going to begin to rise a little bit more quickly. And assets are beginning to reprice, which means greater benefit to banks as commercial loans are renewed, and they tend to have relatively short maturities, meaning that for businesses, the cost to renew their loans is going to get more expensive. They have short maturities. So we're looking at a quarter one improvement here for net margin, 1.67%, and going up to 1.8%. So margin increase of about 13% for JP Morgan. 0.13% for JP Morgan, 0.17% for Bank of America, and 0.19%. So this is actually really good news, and it's what I'm talking about. In a rising interest rate environment, the banks are best positioned to capture a lot of those additional earnings because of the spread between the money, the interest that they earn on the money they loan out, and the cost of their deposits, which is the interest that they pay on those deposits. So banks that are looking pretty good, where their balance sheets are in line to really benefit from this, Comerica, MT Bank Corp, Bank First, the Bank Corp, WSFS, Cullen Inc., Texas Capital Bank Shares, Wintrust Corporation, Zions, First Financial Bank Corp. I left a link to this article. It is on Market Watch, so if you're over your allocated free articles for the month, you won't be able to read it. And I don't have a subscription to Market Watch because, to be honest with you, they didn't give me a lot in terms of they didn't give me a lot that I found was really beneficial in that. But there's 20 banks in here, and the what they're really looking at here is the increase in margin over the last couple of quarters due to the widening gap between what banks are loaning out for and what it's costing them. And a lot of these aren't banks that are focused on capital markets, right? This is really just depositors and lenders. It's a safe way to invest. It's a sure way to benefit as the market turns around. It may not be as exciting as many of the technology stocks that we talk about on here, but a lot of these are representing deep value. Many of them pay a dividend right now. Many of them have lost 30, 40% of their value, and they're only seeing their margins increase. So yeah, very interesting what's going on here. That is, I left that article in the comments. So I also left some book links in the comments too. And it's something that I put those book links in there because originally I wanted to have a completely different conversation today. About geopolitics and its effects on economics. But check out that list of books. Those are Amazon affiliate links, of course. I would get paid like 3 cents or something if you bought one of those books. But in that list is things that I think are very important to understand how our Western economic system developed, how our capitalist system developed, why power structures exist the way they are. So it's gun sales and empires, technological innovation, and early phases of European expansion. Good luck finding a copy of that, though. It's been out of print for a while, but it's actually one of the most important books that I've ever read to understand how empires worked and how they have influenced the modern world. Guns, Germs, and Steel, The Fate of Human Societies by Jared Diamond. Really important book. Once again, understanding why certain benefits or certain societies have risen to prominence. And a lot of it has to do with living right on top of the resources that we use in our modern economy. But there's a lot more in there. A couple centuries from now, this is probably going to be looked at one of the most influential books of the 20th century. One of the most influential books of the 21st century is going to be Sapiens, A Brief History of Humankind by Yuval Harari. Very interesting read, a little bit more abstract when it comes to understanding the economy, but a little bit less abstract when it comes to understanding all of the things that we believe and the structures that our society are built on. And of course, the taste for conquest, the rise and fall of 3 great cities of spice, talking about how the insatiable thirst or the insatiable hunger for spices actually caused the whole age of empires and that sort of thing. So very important for understanding the modern world. Check those books out if you get a chance. If you guys like me making book recommendations, let me know in the comments. I do a lot of reading. So I'm going to get to a couple questions here before I dive back into a few things. Let me see here. Sheila Show, do you think Upstart has an edge over other lenders like SoFi because they're AI? SoFi actually uses a similar, I don't know if it's all that similar, but they tout their AI lending model as well. Upstart has done a much better job of describing it. But remember, SoFi is racing away from being solely a lender at this point. It's going to become, lending for them is going to continue to grow, and it's going to continue to grow apart from just student loans. Student loan lending has essentially been dead for the longest time now. It looks like we're coming up here again on the end of another moratorium. I fully expect that to be extended, and I fully expect that this administration, little by little, is going to chip away at some of the outstanding debt that's out there. It's basically Americans owe like $1.7 trillion in student debt. My opinion is that's basically it's a huge failure on the part of state governments to keep their universities adequately funded, to keep tuition relatively low. I lived in an age where you could wait tables. I grew up in an age where you could wait tables at a restaurant, and you would basically starve, but you could pay all of your tuition, your rent, work part time at at a restaurant waiting tables, and you could do all of that. It's impossible today in just about any state to do that. You have to take on debt to graduate if you don't have a scholarship, or if the military is not an option for you. And the military is not an option for a lot of people. Less than 20, or it's about 20% of young folks coming out of high school will actually qualify for various health reasons, or obesity, or height requirements, weight requirements, whatever it is. They're not going to qualify for going into the military. So yeah, I do think that it's a failure on the part of voters and state governments to not adequately fund that. That's the reason why we have this crisis. Little by little, I think that's going to get chipped away. I think that at some point we're going to see some sort of mass forgiveness of student debt. It's not going to be what everyone wants or who has student debt, but it's also not going to be what everyone who doesn't have student debt is afraid of. So, yeah. And, but no, do I think that Upstart has an edge over lenders like SoFi? The bottom line on that, Sheila's Joe, is I don't really know the answer to that. I don't have a ton of insight into the AI models that SoFi is using. I would suspect, because there was a movement really around the 2010, 2011 timeframe, there was a movement really against all of the credit reporting agencies, because so many people who had survived 2008 and 2009, who had good credit, who had decent credit at least, who did not default on any of their loans during the 2008-2009 crisis, they were now having problems getting back into a home. Whereas people who had a short sale, or who had negotiated the short sale, which is not like being evicted and not like going into default, but they negotiated a short sale, 2 years, 3 years later, they're able to borrow money and get back into a home. So that movement was really started back then, when they realized that they were underestimating the claims paying ability of a lot of people in the United States and in other places. And they thought that was probably a better way to evaluate repayment risk. Upstart publishes a lot of how their different investment tranches are doing, so we can see what default rates are like. And we can see they've been fairly low, and they've acknowledged that they've been low because of pandemic assistance, and they're expected to return to normal at some point. But let's remember also, Upstart deals in, and so does SoFi, because right now they're mostly doing personal loans, and Upstart is mostly doing personal loans. The mortgage portion of the business is pretty small. The car business for Upstart is just getting started. We're also probably seeing a drop off in demand for car loans. But personal loans, that demand remains fairly constant pretty much no matter what happens. It's just that risk metrics for it go up and down based on what the economy is like. So I don't know if SoFi or Upstart has an edge in that respect in lending. But I do know that in terms of financial services, SoFi has a far more complete ecosystem, where financial services is making up a larger and larger and larger slice of SoFi's pie, and I fully expect it to outpace lending here relatively soon. I mean, within the next couple of quarters, I think financial services are going to be larger, and I think that the slower growing component is their technology arm. but it's possible because the way they're doing that, everything is like software as a service and it's all recurring revenue. It's possible that that really sort of underpins their revenue models going forward. So SoFi is definitely a more complete ecosystem. Upstart is a little bit more concentrated. There's nothing wrong with either one of those approaches. I like both stocks right now. So okay, so we're going to do here. So take a look at another question here. Hi, Jason. We have quite a diverse parliament in Australia with multiple parties and many independents. Will the two-party system in the U.S. ever change to give us voters at least a third choice? Wow, that's like I get questions that border on politics sometimes, but that's the first like purely political question that I've ever had. So there's nothing in the Constitution that says we have to have a two-party system. In fact, the framers of the Constitution abhorred parties, and they thought it was a terrible idea. And it does prevent us from getting a lot of things done. And I think it's one of the things. If we had more than two parties, we wouldn't have polarization today. I honestly believe that. You don't see parties with. It's the reason we have this us and them mentality in this country when there actually is no us and them. Government should be about getting things done to help people out and to limit the cost of it. But no one in politics is actually interested in doing anything other than, I'm not going to make generalizations about anyone in politics. And this is a really sensitive time to talk about politics. And I can just say the word politics and I'll lose subscribers, or possibly this video might get demonetized. And yes, that has happened to me once or twice where videos demonetized for something that I don't understand why I appeal it. And then later on it gets remonetized, but the damage is already done. So why do you think Michael Burry is shorting Apple? So let's look at that. Did he short Apple? He didn't short Apple. He sold a put, right? Or he bought a put. Actually, he sold a put. This is what he sold. So he sold a put on there, right? So he's definitely taking a less than. Actually, let's look at this here. What did he do? Oh, there's Apple Inc. Okay. So what he did is he sold a put on that, which means that he's willing to buy the stock if the price dips below whatever the strike price was. So that's actually more of a bullish position than it is like shorting Apple. It'd be a little bit different. Hold on a second. It'd be a little bit different if he actually shorted Apple, but he actually just either bought or sold a put option. And according to this filing, he sold a put option, which when you sell puts, you may be hoping that the stock goes down so you can buy it at that level, but you want to get paid for waiting on it. But the reality is it's usually considered a bullish position when you buy a put on a stock, meaning you think you're going to collect the premium without having to actually buy the stock. So he's thinking that it's not going to decline below the strike price there. So, but it looks like everything else that he disposed of, like I said, he had $291 million under management at last time they did a filing. He liquidated $200 million according to this. According to this, he liquidated $200 million. I went ahead and added all this up before that. So it's about $200 million. I'm sure there's some change in there that I missed. But he had $291 million under management. I don't know if there were some outflows because of poor performance. He only has 4 clients. He has complete discretion to do whatever he wants with his funds. And his moves don't always make a ton of sense, right? And they don't always make a ton of sense. And I don't have a subscription to this site, but the subscription to this site would give us annualized performance over 3 years, beta over 5 years, alpha, and all that stuff. And it would give me all the information that I need here. But when we look at this is like total for Whale, and it's not just for him. This is for Whales and S&P 500 performance, right? So coming out of 2020, Whales did really, really well. Right now, yeah. So, and this is a website called Whale Wisdom, and they take a look at all hedge funds and all really large funds that are out there. So, yeah. But okay. Fred FC says, yes, book recommendations would be great. I read Effortless by Greg McKeown and highly recommend for productivity. Great. Take a look at the recommendations in the description of this video. Everything's an effort for me, so maybe I need to read that one as well. So talk to me, guys, about what you think the reason why he still holds GEO Group. I think it's basically just an oversight. It's such a small portion of his portfolio, of Michael Burry's portfolio. Like I said, under 2%, only $3.4 million or so. It is curious that he left it in a company that has experience and expertise in building large tent facilities to house prisoners and refugees and other people. So I think that is very, very curious. And I think based on some of the earlier tweets that he's made, he is probably more worried about political violence in the coming months than a lot of other investors are. I think that it's important to recognize that this is the first time in our investing lives that we have to deal with the prospect of political risk in our portfolios as American investors. When you're investing overseas, you do that all the time, but this is the first time to do that. So happy to talk about geopolitics and the economy today. And we got our first question from, yes. So I just learned that Saudi is likely faking its oil reserves by half, and they've massively increased their reserve after America left, and they haven't. What do you mean by after America left? And they haven't adjusted to it despite decades of production. What do you mean by America left? We're still there. We still have military bases there. We still have large facilities there. We sell them all of their weapons. Faking their oil reserves by half. Yeah. Okay. No, you would have to tell me what that means. Also, the concept of what oil reserves has changed massively over time because of technology. We knew that there was oil in shale almost a century ago. We did not have the technology to extract it. The technology to extract it was invented in the early 1980s, but it really didn't come into prominence until about 2005. So there's been a recalculation of oil reserves by many people over the years, and a lot of it depends on price as well. For example, prior to sanctions, at $70 a barrel, Venezuela was essentially the new Saudi Arabia of oil before they had sanctions slapped on them. But it's because of the type of oil that comes out of their ground, they can't really sell it at a profit when it hits 50, when it hits 30, when it hits $20. I know those numbers sound ridiculously low, but it wasn't that long ago that oil prices really were that low. At $90 a barrel or 88, what are they now? $86 a barrel today? I can take a look at that real quick. Oil is up a little bit today, about $1 to 87. So I just heard on the radio this morning when I was driving to take my daughter to school that gas prices in Southern California have decreased now for 61 days in a row. I don't know where it's been like for you, but it's basically a big relief for me. But no, the whole concept, Eric M., of what oil reserves changes based on technology or new extraction technology, and also based on the price. At $20 a barrel, $30 a barrel, $40 a barrel, Saudi Arabia has more oil reserves than anyone on the planet. And essentially, you could say that a place like Venezuela has none because they can't pull it out of the ground at a profit. For the U.S., where most of our oil comes out of most of our new discoveries are oil, anything in the last 10 years, you need oil to be over $70 a barrel in order to make a profit. But yeah, so the whole question of what is oil reserves, right? We're not talking about strategic reserve. We're talking about the stuff that's still in the ground. What is oil reserves? That would need to be a bit more refined or defined rather. But the other thing is America left. I don't understand that statement because we're still there. We sell military bases there. We still consider them an ally. I'm not sure why, but yes. See, Sheila's Joe says, I know they make some great tech, but Apple looks to me like they were late to the subscription game, and their Apple TV and Apple Music subscriptions just don't compare well to the competition. So I have made a habit of underestimating Apple and getting spanked for it. And that's something that I'm not really doing in the future. I really thought that Apple would go into kind of a terminal spiral and be basically the new GE after Steve Jobs died, because Steve Jobs created this giant cult of personality. And I didn't think that Tim Cook had the chops to pull it off. But he actually turns out to be kind of a really perfect technocratic manager of a large company like this, and I'm actually really encouraged by how he's guided Apple through what should have been really, whenever you have a founder-led company like that and the founder dies or goes away, it generally heralds the end, or at least the end of excitement. And Apple has continued to be innovative. Maybe they are late to the subscription game, but Apple never has to be first at anything. The iPod was not even close to being the first MP3 player out there. I had a Rio MP3 player that was the size of about a deck of cards, and I had that I think in 1998, and it even had this connection. I could use it to plug it into my stereo. I thought it was the coolest thing around, and it lasted for a long. I may still have it somewhere. That product never took off. It was never bought. It was never really. It was bought finally by a company, but it basically just died on the vine. And yeah, so that is one of those things. And they came out with the iPod, I think, in 2005, was it? And then ended up bringing MP3s into the mainstream. But they were around a lot for 7 years before that, without anyone really exploiting that new compression technology for music. And they came up with a way to profit on it too. So I suspect that they're taking the first swipe at Apple TV and first swipe at Apple Music subscriptions, but don't count them out just yet. They've done this a lot of times. They had a lot of competition going into the MP3 space, and they wiped the floor with all of them. So let me see here. Oh, you're talking about nationalization of oil reserves. See, Eric, that actually would have been about the time we had kind of a technological revolution in oil. And it's always been true that there were probably oil reserves that were left undiscovered in Saudi Arabia at the time. There was a whole area of I want to believe it's the southwestern corner of Saudi Arabia where they didn't actually have political control over it. It's part of Saudi Arabia, but they actually have a small Shiite minority there. They did not have any political control over the area. It was actually not really controlled by the government, even as late as I want to say the mid 1990s. So there wasn't a way to verify physically whether or not they had oil supplies there. Could they be deliberately duplicitous? I'm sure they could. But why would they? They've always enjoyed the position of having the largest oil reserves on the planet at a certain price. But yes, Americans were bought out because they nationalized their oil industry. And they started that nationalization in the 1960s. It was completed. It may have been actually later than that when it was finally completed. It may have been in the early 1990s or late 1980s. So 1 year after Americans got bought out and the Saudis increased their reserves by almost 100 billion, has been unchanged that despite all of the production. They may not be updating it, or they may keep making discoveries. That's something I'm not really sure about. So, and there's always, I don't have the right word for it without getting banned by YouTube. But there's always a certain amount of chicanery that goes on with calculating oil reserves. Anyway, I would take every sort of announcement with a grain of salt. Yahoo shows that GEO Group announced today that they have renegotiated their short-term debt, and it's gone up by about 5%. That could be the reason that Burry held. Yeah, I just don't find GEO Group to be a compelling investment, even if we're going into a downturn in the economy, even if crime rates increase. So I can correlate our economy with greater rates of incarceration, but I've done the research on this. I can't correlate greater rates of incarceration actually with building prisons. And that's the weird thing. You should be able to correlate that, but you really can't. And and there are lots of people in this business as well. And like I said, it may be we could be making a big deal out of nothing, or it could be the political violence expectations, like I said. So yeah, and right after I talk about political violence, I have to highlight sparked interests comment. Good vibes, hello to all. Yes, definitely. How do you think Apple's supply chain will be affected by unrest in China? So number one, it would be massively affected by unrest in China. And look, sort of social unrest in China is something that has long been predicted by sociologists, and it's not because there are new things happening in China. This is the constant refrain in Chinese history that is always popular rebellion, in part, that brings down whatever government is in charge in China. And there are a lot of generational pressures right now on Chinese youth, and I think that they find that while outwardly, publicly, they give a lot of respect to the CCP. I think that there's a lot of internal dissent right now, especially because the economy has been really mismanaged by Xi Jinping, and I hope this doesn't get my visa to go to China get rejected, but it has been to a degree mismanaged, and particularly when it comes to the banking industry, there just hasn't been enough regulation. Of course, when it comes to the building industry as well, there hasn't been enough regulation. And I don't want to go too much further into my thoughts on that because I really have a surface level understanding. I don't speak Chinese. I'm translating articles. So I really have a surface level understanding of the mechanisms, what's going on there, and the culture surrounding real estate there. I'm more of an expert in manufacturing in China, and especially auto manufacturing in China, even especially internal combustion engine manufacturing in China. But yeah, so it would be affected. But Apple has actually wanted to get out of China for a number of years, and actually the best source for all of that information is Apple's website. They have a ton of articles on their website where they talk about reshoring some of their production here, and they frame it in the manner of they want to shorten supply lines to reduce costs. They talk about how costs in China have raised over the years, how that labor costs are going to they have to to serve the interest of the Chinese population. Labor costs have to dramatically rise in China, and they're starting that upward exponential curve, and they're moving further up the value chain, just like Japanese manufacturing did, just like German manufacturing did, right? So all of that is coming to fruition here. And at this point right now, Apple's looking to diversify away from China. They're looking to bring some of those operations back here to the United States. There's going to be a multi-billions, tens of billions of dollars in investment in chip manufacture and manufacturing here in the United States. Let's remember, Apple's never made any of their own products. They contract that with companies in Taiwan or in mainland China. I guess I could. I guess if I ever want to visit China again, I should maintain a one China policy on this channel. So, yeah. Any thoughts on these semiconductor stocks, KLA Corporation and Texas Instruments Incorporated? So I was raised in Texas, so Texas Instruments is one of the companies that I definitely keep abreast of. Either one of those companies would probably be a very good long-term investment at this point. And if you were on my live stream yesterday, you would have seen the article that I outlined saying that the cyclicality of semiconductor investing may be moderating quite a bit because demand for semiconductors is no longer dependent on just a couple of like retail consumer items. There's a lot of demand in it for AI, a lot of demand for it in cloud computing, a lot of demand for it in a lot of other different applications that are not consumer based. And it's just where the economy is going. And I think that any US based semiconductor manufacturer right now is probably a good long-term investment. Be prepared to lose money in the short term. I think it's going to be a bumpy ride no matter what, as we really should start repricing assets, these assets based on current cash flows now and future cash flows in a different manner. Before, we counted on the cyclicality. You counted on that semiconductor stocks shooting up, dividends being raised, and then the market would go down, the price would crash, they'd cut their dividends, and you'd have to reprice everything then. That cyclicality, I don't think it's quite over. We're going to see some of it right now, as we still see some people with the old mindset saying this is all a cycle, it's going to come back in 3 or 4 years. And we see people in the new mindset who are like, demand is not going to decline as much as it has in the past, because now there's all this new demand for autos, for gaming, for cloud computing in particular, for AI, and just for big data applications with government. So there's a lot more going on with semiconductors in the past and maybe ending that cyclical nature of the semiconductor market. So have a lot more people on here than usual, probably because I talked about Michael Burry earlier in the podcast, earlier in the live stream. Rewind that at some point. Take a look at some of the points that I made regarding how much money the man actually has under management. It's not that much. It's actually far less than the average registered investment advisory fund. He's got about 291 million under management. The average registered investment advisory fund has about 341 million under management. GEO, the current holding that he has, only makes up about 2% of the portfolio that he now has under management. So it's actually an insignificant sort of holding inside, what would be about a $200 million portfolio. So there's about $91 million from his last filing that is missing from this one. So I don't know if that is from withdrawals or from drawdowns, people taking money out of his hedge fund. But remember, he only has 4 clients. He only has $291 million under management, and I'd say that roughly half of 4-person registered investment advisory firms across the nation probably have more assets under management than he does. So yeah. Yeah, so I talked a little bit about this earlier. I don't think it was a statement or a real investment. It may have been more of an oversight. I do think, I mean, it's only 2% of his portfolio. Like, so much unrest is coming. Prisons are going to make lots of money from crime. I don't necessarily know that it's from crime. I think he's probably a little bit more worried about civil unrest, political violence, and probably like temporary prison. Like, federal facilities don't really have the room to. If we had some sort of like mass political event where 50,000 people got arrested for street violence or something like that, we don't have anywhere to put them if they committed federal crimes. We just don't have. I mean, basically, it'd be tent cities out somewhere surrounded by barbed wire. And GEO has the expertise to do that. They landed some contracts a couple of years ago, I think, with the Haitian refugee crisis when the Haitians came over the border in Texas. They've done some work with like 10 cities out in the desert in Arizona. They've done work in other parts of the country where they've done like set up temporary facilities for people. So, but when you look at the numbers of this company, it doesn't seem like a great investment, period. It would have seemed that we would have had a huge spike in crime and a huge spike in incarceration in 2020, and we didn't because of the pandemic. Because, yes, Shula's Joe says GEO is in mental health care. Yes, they are. But it's housing for mental health care, and they are a REIT as well. They function as a REIT, right? Which doesn't, this is also something that doesn't make a ton of sense for his portfolio. When you function as a REIT, 90% of what you make has to be redistributed to the actual shareholders, right? So this is a REIT, of course, that is not paying a dividend because you have to pass out 90% of what you earn back to your shareholders as what's it's called a distribution. It's not a dividend, but it doesn't say what the dividend is that they're paying right now because they're probably not paying a regular one. Their last ex-dividend date was January 22nd, 2021. So they may be doing that on an annualized basis. I would have to find a different source to figure out where that is. But that limits your growth. You have to go out and do secondary offerings of stocks on REITs in order to get money to buy new properties or invest in new properties, or you have to borrow money to do it, or you have to, and secondary offerings, of course, involve dilution. So there's a lot of mysterious things going on here. Mental health care, yes, they're involved in mental health care. That makes sense in recession. Yes, crime goes up during recession. There is no correlation, though, between prisons being built and a recession, and that's the thing that blows me away. I thought there would be, and when I started looking at the history, the history of increasing our prison capacity is actually relatively stable. It doesn't spike when we have a recession, so it's not correlated at all. So I think that it's either some degree of an oversight. Maybe it's a political statement. Maybe it's a statement about fear of political violence. I don't know, but it doesn't make a ton of sense. 2% of your portfolio in a company that has had 2% sequential decline in annual revenues and similar declines in profits since 2019, where you would have thought that in 2020, they would have had an increase in profits. Yeah. So hold on a second. Keep in mind, Eric M is back to Saudi Arabia, which Saudi Arabia is always an interesting topic to me. It's not necessarily an interesting topic to everyone, but keep in mind their incentives to fake it. If the world thinks this is more oil, then we don't need to transition as quickly, and it gives them more political clout. Sure, there is, and they are fully aware, though, that their political clout is no matter what happens, they're pretty much done after the 2050s or 2060s, and the House of Saud has not been great at making friends. And their days are numbered. I think they know that, and they're probably only going to survive in exile. Whatever ruling family is left in Saudi Arabia after 2050 or 2060 or so will probably get the Marie Antoinette treatment, in my opinion. And the death knell in the House of Saud was certainly the succession of MBS. He's not just a brutal murderer. He's utterly incompetent at running the kingdom and utterly incompetent at managing the switch from an oil-based economy to something else. Meaning they have to develop something else, or they're going to go back to camel herding in the next 50 or 60 years. So they have an educated population. They have spread around the wealth to guarantee loyalty. But the best educated people, the ones who could be developing the new economy in Saudi Arabia, they're all leaving and they're all going somewhere else. And the United States and especially the United Kingdom are the largest beneficiaries of all the money that Saudi Arabia has poured into education. So I don't think that they're going to be. They are a global power now. To say they aren't is kind of missing the point of how important oil is here. But they will not be a global power 20 to 50 years from now. And I'm sorry, by 2050 or 2060 or so. And they won't be in much different a position than Yemen is today, in my opinion. So, yeah, I think you're correct. There's so don't laugh at camel herding. And I'm going to go into I remember talking to someone in southern Jordan once when I was there, checking out some archaeological sites of this Chalcolithic site that I was very interested in, because this is where this archaeologist claims that King David's seat of power actually wasn't. It wasn't in Jerusalem. He thinks it was in the south, close to these copper mines. Anyway, just talking to this local Bedouin, and we're joking around, and he's like, "How much do you think a camel is worth?" I'm like, "I don't know." It's like $100. He's like, "No, they're worth about $2,500 a piece." And I look out, and all I can see is freaking camels. And I looked at him. I'm like, "This dude is rich, right?" So don't laugh at camel herding. It's a more lucrative profession than you might think, especially when this guy was telling me that the camels that he raises for racing make even are worth even more. So, what's interesting is that his great grandfather predicted that. Yes, that is exactly what his great grandfather predicted. He basically predicted that his descendants would not invest in the infrastructure of the country, and that within a couple of generations, they would be back to roaming the desert and fighting over water holes, which I'm not saying that as an insult. That's just what you do in that environment. You don't have a choice. You have to control water and you have to control pasturage. And that's what they're going back to. And I think that is why the House of Saud has always made a great effort to maintain good relationships with the Bedouins. The Bedouins do not like the city dwellers, and they hold them in utter contempt. But the House of Saud has done a very good job of. I got an interesting story about that. Years ago, I did a short-term contract in Tehran just to do some computer programming, is some C++ stuff. It was 90 days or something. And as we were leaving, our plane couldn't take off because there was a Bedouin family camped out on the runway. And I'm like, I'm going to miss my connector in Heathrow here. What's going on? And basically the person who was in charge, we can't do anything about it. The king protects them. The Bedouins can do whatever the hell they want. If they want to camp out in the middle of the runway all day long, no one can stop them. He said they were connected to some family. I don't know who it was, but essentially they had lunch, they had tea. My plane was 3 hours late. I missed my connector at Heathrow, and I'm sure that nothing happened to those Bedouins. So the social and political dynamics, the things that you think you understand about every country, until you go there and you experience it for yourself, it's really hard to understand. But yeah, so you are correct, though. The great grandfather actually predicted that what is likely to happen to Saudi Arabia in the next couple of years, their decline in power, their decline in importance, and the return to a traditional lifestyle, he predicted that utterly because he knew what his descendants would be like. He knew that they wouldn't take the wealth that they had and invest it in building themselves up into a greater empire of any sort. So, yeah, and it's likely that they're probably going to get subsumed by one of their neighbors, one of their neighbors. I don't want to hazard as to which one. This is pretty far in the future. But yeah, it probably won't look much different than Yemen does in the next 50 years. Anyway, we are coming up on an hour here. Any more questions about Michael Burry, go ahead and speak up out there. Like I said, I went over earlier kind of the importance of the 13F, all of the things that he disposed of, the fact that he only had $200 million to dispose of and only has 4 clients. He has massive importance because of his draw on Twitter and because of the fact that everyone publishes everything that the man says. He has massive draw because of the 2015 movie and because of his popularity on Twitter, like I said before. But his actual importance in moving money is not that important. This GEO holding at $3.4 million is only 2% of the overall $291 million that he has in assets under management. And like I said, it looks like a lot of that left, either from people taking the money out of the accounts and walking away, or from declines in prices here. I don't think this portfolio would have decreased by 30% or so since Q1 filings. So I'm gonna guess that there were some withdrawals, and he had to sell anyway to satisfy those withdrawals. The fact that he sold a put on Apple doesn't make me think that he's necessarily all that bearish on Apple at all. Well, it really kind of depends on where he sold it. But let's remember, this is when you sell a put, it means that you are willing to buy the shares. It is not shorting the stock. Shorting the stock would be buying a put. So it allows me to dispose of the shares at a price that I want to dispose of them at. Okay. So this is very different because this is only sells, or the 13F. He is not required to actually publish anything where he's long on a stock at this point. So assets that he moves money into don't need to be reported. And that's one of the requirements of one of the things about hedge funds that's kind of unique is they really only have to report when they either go short on something and they sell something. Now they have to report their entire portfolio at that point, but if they're only buying and they're not selling anything, they don't have to report anything. So that's kind of interesting there. So yeah. And Michael Burry has made a lot of mysterious moves in the past. And if you're looking at sort of asset allocation over time based on sectors, the difference between his 2021 Q1 2021 and Q1 2022, they're not even like remotely the same. And he typically has 100% turnover quarter by quarter in his portfolio. He's not a long-term investor at all. So the fact that he does something like this, yeah, it's a little odd, but I'm trying not to read deeper meaning into this other than the fear of political violence moving forward. So I think that everyone kind of feels a little bit of that fear now. This is the first time we're really dealing with it in the investment world in our lifetimes. So the reality is there was tons of political violence in the 1970s. In fact, there were more than 2,500 political bombings between 1970 and like 1982. So we have a long history of political violence in this country. We just really haven't had it that much of it since the 1980s. And now it's, regarding his prediction, is Michael Burry a genius or is he lucky? Well, he's a genius. So it was obvious at the time that because I worked at a regional bank, and I worked at a regional bank that had daily screaming matches between customers who wanted to borrow money and the bank managers or loan managers who had to tell them they couldn't borrow money. And this was in 2008. I worked for a bank that was owned by a Japanese bank. They were extremely conservative. They had hundreds of billions of dollars on deposit, and for the entire regional bank that had offices blanketing California, Arizona, Nevada, Washington, and Oregon. For that entire area, they only had 4,400 home loans. They were extremely, extremely conservative. And we had people scream all the time that they'd been banking with us for 20 years. Why wouldn't we give them a home loan? They never accepted the explanation, you don't qualify, right? And I remember walking into when I applied for a mortgage in that same time period, I actually could not provide proof of income because I just started my job. I was 100% on commission, so I had no proof of income. They just took my word for whatever I said that I owned or whatever I said that I earned. And I didn't have to provide anything. And I only paid like 0.25% extra in terms of an interest rate because of that. And I got a fixed interest rate on a loan on a home, pretty much exactly at the wrong time to own a home. And I was underwater on it for basically almost close to 10 years, right? Or 9 years underwater on that place. So I don't know that he's definitely not a genius for seeing what was happening, but a genius for understanding how it was going to affect collateralized debt obligations and how the reinsurance market was working on basically there was more insurance on collateralized debt obligations and mortgage-backed securities than there were actual mortgage-backed securities and collateralized debt, right? And that was one of the weird things that happened in that time period where we almost saw and we would have seen a complete collapse of the bond insurance market and debt insurance market, which is actually still a thing today, without the government stepping in and backstopping it, because the same loan sometimes was insured and reinsured like 3 or 4 times by people who hold different slices of the pie, or it was reinsured by the company doing the insuring, reselling it, right? That would have completely collapsed, particularly like there's a company out there, I forget what they're called, but they actually back municipal bond issues, and you pay them a slight fee on top of it. It usually comes out of the yield to maturity, and it ends up going to the company that insures this. I'll get to you in a minute, Wookie. It goes to the companies that insures this, but that almost collapsed as well. And I think it was really the pressure on the insurance companies to actually back up the bond issues that were probably going to fail, that were backed on collateralized debt, where the underlying tranches that were going to pay back that debt couldn't do it because they didn't have the income that they claimed to. A lot of those were not going to work over time. And he was one that recognized the cascading effect of that. Like we all knew that a recession was coming. We did not understand that it was about to collapse the global economy. And without the government stepping in to rescue the global economy, it already lasted for a very long time. The Federal Reserve response to 2008 was, in retrospect, actually looks like they did too little. The response to 2020 actually looks like they did too much, but we won't know for a decade or so. And I'm not talking about inflation there. I'm talking about a whole range of other issues. But yeah. But no, I think he was a genius, not for recognizing the issue, but recognizing how to capitalize on it and what the potential ramifications were. I remember reading the tweets, usually like a week late out of that, not really understanding what I was reading at the time, but then really getting into CDOs, which is the collateralized debt obligations, then understanding just exactly how screwed we all were. And in that respect, he's definitely a genius. But he makes these weird predictions all the time and then goes back and deletes tweets. He frequently deletes tweets. I'm not saying anything about tweets that he's really deleted, but I would take everything that he says with a grain of salt. His importance is vastly magnified, far beyond the funds that he actually controls under management. He's only controlling $200 million or so right now. That's all he liquidated in the last quarter, whereas somebody like Goldman Sachs has about $9 trillion under management. And the largest hedge funds have $7 to $8 billion under management. They're not even that large, right? So it's not the hedge fund managers that move markets. They just get all the press. It's the institutional money managers that have trillions of dollars. One company in the United States has more money under management than the rest of the world owns in U.S. debt, roughly $9 trillion. So really, really weird. So not Burry. Markets are too happy. They weren't all that happy today, but one day doesn't make a trend. And this all could be a bear market trap. We don't know that. It definitely all could be a bear market trap. Saudi Arabia does have a huge investment fund near $1 trillion, I think. Yeah, so the Saudi Sovereign Wealth Fund does make a lot of investments. In fact, they had a huge stake in Uber at one point, long before they went public, which is one of the reasons. And it was a smart investment on that part. They should be investing in what's eventually going to replace, or something that is eventually going to replace what they're selling. So I think it's smart. So inflation, Ukraine war, EU winter, food shortage, China housing equals dead meat. The problem is, Wookie, is that we're looking at all the signs now, but I want you to go back and Google recession 2021, Google recession 2020, Google recession 2019, Google recession 2018, all the way back as far as you can. And you will find someone listing similar, equal, or more, or vastly more frightening things in their headlines than saying that we're going to have a recession this year. And almost all of those are absolutely incorrect. And like I said, recessions are actually far less frequent than people predict them. And even when things are looking great, I remember recession 2011 didn't happen. Recession 2012 didn't happen. 2013, 2014, 2015. Stop paying attention at that point, and I just started investing for the long term, which means that I tend to buy a lot more when there's more uncertainty. and tend to buy a lot less when people are super happy. So I've been buying lately, but I've really been picking and choosing the industries that are most beat up, knowing that I'm probably not going to make a ton of money for 5 to 7 years. And I'm happy with that because I'm a long-term investor. Shoeless Joe says they're invested in Lucid, aren't they? Yes, they are. And Lucid looks like they're opening up a factory in Saudi Arabia. Plans already there. I think a facility's already been located. It's mostly been designed. They have an idea of how much they want to export. So you may or may not know this, but for a very, very long period of time before the Silk Road and different areas really took over, trade, Saudi Arabia, the Hijaz rather, was a center of trade, especially shipping, a center of piracy also. And I wouldn't be surprised if we try to see shipping, manufacturing, and exporting somewhere out of the Red Sea, because it has access to the Suez Canal in one direction, access to the Indian Ocean in the other direction, and they're able to benefit from because now caravans don't have to stop there anymore, ships don't have to stop there anymore. So that's the reason that area lost a lot of prominence after basically that era of shipping was over. But the Suez Canal didn't really benefit them at all. I think in manufacturing center there, if they can manage it with water supplies, with getting things in there and all that stuff, it may actually be beneficial for a lot of companies to have manufacturing facilities in Saudi Arabia. And I say this, and this is horrible. Saudi Arabia has the ability to procure cheap labor force from India, from Africa, from other Arab countries, and they pay the people dirt and work them almost to death, so they can send money back home. And of course, the Philippines and Indonesia as well. If you've been to Saudi Arabia before, you'd notice that most people actually doing anything for work are not Saudis. So Saudi people themselves, for the most part, they don't do physical labor. They hire someone to do it. Manufacturing would be no different. Where I was, at least, I never saw like any manufacturing facilities there. I spent my time in an office for the most part. For me, it was actually one of the most boring places on the planet to live because I don't like shopping. And there's nothing for a single dude to do there. Nothing at all. It is really boring. And like, no, you can't go out to the movies. Nope. Can't go out to the bar. Nope. You have to take the bridge from Dhahran over to Bahrain on the weekends. And that's where you can see all the Saudis having fun, the Saudi men, at least, drinking and having fun. But you can't do anything there. So it actually, you have a well-educated population there. They're extremely well-educated, but the vast majority of people doing the work in the economy are from India, from Bangladesh, from Pakistan, from other Arab countries. And there's a hierarchy on how well you're treated based on where they think you come from, and it's very interesting to experience that. And when I say interesting, I mean it wasn't pleasant at all. So, but anyway, we're coming up on an hour. We're actually over an hour, guys, and I got to talk about what I wanted to talk about today in terms of Michael Burry, in terms of his actual importance to financial markets. Far less important than people think he is. He's just important because people like his Twitter feed. So I hope I got that point across. Also, didn't get a chance to talk about really in depth, sort of like my favorite books on why the global economy looks like the way it does today, and and kind of where we might be going in the future. Check out that list of books in the description below. I also have a Patreon. I got the greatest group of Patreon members. There just aren't that many of them, but it's the greatest group of guys that share really good information. It's highly intellectual. It's non-controversial, and it's non-political. We just talk about how to make money. All right. And so thank you very much. And I will see you folks. What day is today? Wednesday. I will see you tomorrow. And I'll be taking Friday off as usual. Thank you so much.